Get ready to pay more money if you are trying to buy a home. Mortgage rates have been going up for the past few weeks, and right now, mortgage rates are the highest since 2014. Industry experts blame the spike on a huge sell-off in the bond market. Higher mortgage rates combined with higher home prices and low supply will make it a challenge for consumers to find an affordable home this spring. So we brought in the expert. Elliott Eisenberg is here. He's an economist, and you just spoke this morning about the situation with the price of homes and the mortgage rates. Tell us where you were and what's your message?
I spoke at the Greater Kansas City Home Builders Association at a forecast breakfast.
Yeah.
And this was a major topic of concern. Not enough homes available. That's really the biggest problem. Job growth has been quite good. So we're creating jobs, but unfortunately builders can't build enough homes to keep up. And affordability keeps going down a little bit. So it gets harder. You have to move further out, have a longer drive, rent a little longer. Somehow you have to compensate.
What do you say is the reason that rates are going so high?
Yeah, the sell-off is right. It's
okay.
Growth is going to be a little better this year, next year than it was last year. And with higher growth comes a little higher inflation, and that's going to cause interest rates to rise, and the Fed will start to raise interest rates and so on. It's not going to go up a lot, and while rates are high by historic last couple of years standards, compared to what they were 10, 15 years ago, these rates are still very, very low. It's all relative.
So what are the rates? What's the average rate? 30-year fixed mortgage? What do you think?
4.5%, whatever
so
they are.
Seriously, it used to be, where was it? It was ridiculous.
Even 10 years ago, they were 7 or 8%.
Yeah.
That was a good deal, let alone 25 years ago when they were 15, 16, 18%. And people thought, oh, I'll lock in and get a good deal.
I know. So how can we, there have to be some lower interest rates. Do we have to search? If we search, can we find some lower rates?
The best way to get a lower rate is to take a shorter term mortgage.
Oh.
People don't live in their home for 30 years nowadays. People often live 5, 10 years and they move. So get a mortgage if you can take the risk of refinancing in 10 years. Take the risk because you'll save a third of a point, a quarter point, a half a point. That's a lot of money, especially when you're starting out.
This has to be good news for sellers.
Oh.
They're sitting pretty.
It's a great seller's market across the country, not just in Kansas City, everywhere. It's a great seller's market, right? And if builders could build more homes, they would. But the problem is there aren't enough laborers around out there. Regulatory costs are higher, input costs are high, land costs are high, and so on and so forth. Unemployment is low for them as well, right?
Yeah. All right. So sellers are in a good situation, but buyers, last strategy for them? I know you said go further out, have a longer drive to work, but in terms of trying to find that house that's on the market, do you have to snap it up right away?
Snap it up quickly and appeal to the seller. Write a great letter. Hey, we're great people. We're a great family. Our dog loves the place. That may be what it takes. It may be what it takes in a tie. And they say, oh, well, this looks like a young couple. We want to sell to them. Be great.
All right.
Appeal to the heartstrings.
Pretty good advice. Thank you so much for coming and sharing, and good luck to all you people trying to buy a home. Thanks so much for coming.
My pleasure. Thank you.